Thanks, Chrissy. Let's pick up the energy into morning tea. A little bit of a change in my presentation today. It's exciting to come here and listen to people exploring and hear about battery metals and forward-focused things. I'm hoping that there's some people in here who are here looking for an investment. And you might not think you are. You might be one of my peers waiting to present. The good news is I'm going to give you the opportunity to make some money. Last year I was here, we were 23 cents. We're up about 30%. We're trading at 30.5. I think that's just the lemon next to the pie in terms of the opportunity about Fenix. The first thing to point out is we actually dig rocks up and sell them for money. We're not exploring, we're not trying to do something. We did that a while ago. We built a mine and now we're about to transform the Midwest. And you're right, Chrissy, it's very exciting. Big change in our business from last year. Fenix Resources had the Iron Ridge project. We commissioned that mine and built it. In the last 12 months, we've really developed three pillars to our business. We're a mining company. It's where we started. We develop and unlock the value in stranded resources in the Midwest. And I'm about to show you what that looks like. A key part of that is our ability to manage our logistics. It's actually the biggest part of our business. And the third element is based on infrastructure. We have a commanding and highly valuable position at the Port of Geraldton that is unlocking value in our projects, and we believe, and we're already demonstrating, can unlock the value in other people's projects for mutual benefit. Let's go to Iron Ridge and the Midwest. This is just north of Perth. This is our current project map. You can see the Iron Ridge project. That's 500 kilometres from the Port of Geraldton, north of Kew. And we've expanded our portfolio significantly in the last 12 months. We consolidated the ownership of our logistics business, Newhaul. It's now a wholly owned subsidiary of Fenix. We acquired the Midwest infrastructure of Mount Gibson Iron. They're the most successful miner of the Midwest. They mined 50 million tonnes over the last 20 years. And they invested more than $500 million in the Midwest. And we acquired that infrastructure, on-wharf storage facilities, conveyors, access to the rail unloader owned by the Midwest Port Authority. It augments our existing facilities and the only side-tipping truck unloader in Geraldton. It's infrastructure that is irreplaceable, has an insured value of north of $150 million. We also acquired two rail sidings, equally irreplaceable, Riverdini to the north, Peringeri to the south. To build those today would cost you more than $50 million if you could. We also acquired the Cheyenne Iron Ore Mine, 15 million tonnes of iron ore resources, a shovel-ready project that Mount Gibson spent $40 million exploring and developing. With that transaction was a $25 million transaction. Mount Gibson have joined us as our largest shareholder at 8%, and we're going to continue their legacy and going to capitalise on those assets. And the third transaction that completes the picture is we acquired a 10 million tonne right to mine from Sinosteel. I see this as the keyhole that unlocks our mining pillar. Sinosteel control 290 million tonnes of direct shipping iron ore in the world range all around us. The Beebyn W11 project is 20 kilometres away from Iron Ridge, and it gives us the opportunity to replicate the success we've had there. So here's Iron Ridge. Let me talk you through this video. Beautiful ore body, 30 metres thick. It's 65% iron ore. It's one of the highest grade iron ore projects on mainland Australia. We've been incredibly successful at mining this at 1.3 million tonnes per annum. It's a very simple two-digger operation, 5 trucks. Macca are our mining manager here. They also run the crushing and screening plant. We produce a lump and a fines product, a very high grade, very low impurity iron ore. What a beautiful place to mine. Very clean, very consistent operation. We're halfway through that ore body. It's constrained by heritage. We mine it in partnership with the Wadjuri people. It will deliver another 4 or 5 million tonnes over the next 3 or 4 years, and we're looking forward to it. We're doing some exploration drilling at the moment. We think we will have some extensions on what is an incredibly effective ore body. Here's our quad road trains being loaded on the weighbridge at Iron Ridge. We then efficiently and very carefully transport that 500 k's to our facilities at Geraldton. Here's the side tipping unloader that accesses our sheds at the Geraldton port, which allows us to load Panamax, roughly 60,000 tonne boats, and those deliver our iron ore to a range of global customers. We have 2 life of mine offtake partners. 50% of that material goes to China under an offtake with Sinosteel, and we also service a range of customers in Asia under an offtake with Atlas. So that's our existing operation. If there's shareholders here who followed this story, it's been a very consistent track record of achievement. There are a lot of companies here who are exploring and developing and announcing exploration results and feasibility studies. Not a lot of people go backwards and talk about their previous plans. In 2019 and 2020, Fenix published a feasibility study for Iron Ridge. It said that it was going to cost $15 million to develop a 1.3 million tonne per annum mine, and it forecast that our C1 cash costs for that mine would be 85 Australian dollars FOB Geraldton. The split of that $85 was roughly $20 mining, $5 crushing and screening, just under $50 for haulage, 10 cents a tonne kilometre, a bit of a benchmark in the industry, $10 at the port, no G&A. I'm very proud that in our last 2 quarterlies, we've actually delivered less than $80 Australian dollars FOB Geraldton. So 4 years later, we're mining. We delivered the mine within that capital budget, and we've significantly outperformed the proposed FOB costing. We've averaged more than $50 cash flow generation on the 4 million tonnes we've mined to date, and in the last couple of quarters in the prevailing strong iron ore prices, we've averaged close to $100. It's a really profitable operation, and we're looking to do more. I described in the last map the transition from the company we started on the left to the company that's on the right with 3 pillars. Let me take you through our mining assets. We've spoken about Iron Ridge. You can see the ore body there in the pit wall. You can visually mine this. There's not a lot of low grade. Our lump product is 64% and our fines product is 63%. Very sought after by customers, and you saw it on the video. The Beebyn W11 deposit, the 10 million tonne right to mine that we've secured from Sinosteel, 20 kilometres away from Iron Ridge. It's almost an identical opportunity. It's a 20 million tonne ore body. We have a right to mine 10. We're very confident we can extend that with Sinosteel. We're looking forward to demonstrating that to them with success. We've outlined that we're preparing a mining proposal. We're going to publish a feasibility study for this operation in the next quarter. Our expectations are that its metrics will be very similar to Iron Ridge. We're aiming for a 1.5 million tonne per annum operation operating at similar scale. And we'd like to get that operation up and running by the end of the year, and we'll identify that in the feasibility study. So early next year, hopefully we're having 2 operations running side by side and producing close to 3 million tonnes from that complex. The largest capital item here, as it was with Iron Ridge, is extending the sealed road, the 20 kilometres from Iron Ridge to the W11 deposit. A couple of other opportunities for production. I mentioned the Shine iron ore mine that we acquired from Mount Gibson. You can see there in this photograph when we say shovel ready, it's literally shovel ready. Mount Gibson commissioned this mine in 2020. They did 3 boats and then put it on care and maintenance when shipping costs spiralled out of control. Their haulage contractor costs were larger than they expected and the iron ore price dipped. We are confident in our ability to hedge the iron ore price. We obviously have a different focus in terms of we own and control our own logistics functions, including fixing our shipping rates. This is a 58% ore body, and we've indicated again that we're going to make a decision and identify to the market our plans for Shine in the current quarter. It does represent an opportunity for a similar scale operation as we have at Iron Ridge and at Beebyn. Twin Peaks is a little different. We're all about unlocking value. This is a private iron ore mine in our neck of the woods. We've acquired 500,000 tonnes at the mine gate for 40 Australian dollars. We completed our first shipment in the last quarter, and that's unlocking value both for Fenix, using our wholly owned logistics train, as well as for 10M, the owner of the Twin Peaks mine. There are a lot of these sort of opportunities, and we're talking to a number of other stranded deposits about how we can help them and make us both money. Our mining ambition, we've got one mine at the moment. Stay tuned. When I come here next year, we'll have 2, possibly 3, and maybe even 4 mines up and running, and you can work out how that's going to relate into our revenues and cash flow based on our cost structures. That's our mining business. As I mentioned in the introduction, we're really a mining company, a logistics company masquerading as a miner. We're incredibly proud of the workforce we have in Geraldton and the focus on this business. We achieve costs that are unheard of in the industry. There's not one answer to that. It's a relentless focus across the business. We run it very differently. Long distance bulk haulage is not a unique business. In fact, we're surrounded by competitors in the Midwest and across Western Australia and across Australia. This part of our business is run by my fellow Executive Director, Craig Mitchell. He's the founder of Newhaul. He was also the founder of Mitchell Transport, which was acquired by Toll in 2011 for $140 million. He has a team that have worked with him for 20 years. They're at the cutting edge of what's possible in bulk haulage. If you're in the Midwest, you'll see our 65-metre quad road trains go past you. They're always clean and they're driven by really dedicated modern technology and modern happy drivers. It's a great business. It's more than just haulage. Obviously, it links to our loading and unloading activities as efficiently and effectively. Obviously, at the moment, we're moving iron ore. We've secured 2 third-party customers. Our current run rate through the port is close to 4 million tonnes, 1.3 million tonnes from Fenix, and the additional tonnes are provided by Wiluna Miners, the listed Kufi Limited and the private Gold Valley. And we're also looking to expand into other commodities. A key part of our business is the port. This is the bulk commodity export from the Port of Geraldton. If you're an iron ore, a manganese, a lithium, a spodumene, garnet, silica sands, potash, base metals, you name it, you're trying to ship your product from berth 4 or berth 5 at Geraldton Port. And you can see that we dominate the on-wharf port storage. Sheds 4, Shed 5, Shed 13, they're the only sheds that are connected both to our truck unloader as well as the rail unloader. We have a capacity here to do 10 million tonnes a year. We currently have reserved capacity of 4, which we're using. Stay tuned with how we're going to expand that. Chrissy mentioned in the introduction that we're very active in the local community. I'll come back and talk about our forward plan quickly. There's 110 projects currently doing feasibility studies in the Midwest that if you follow through their plans, they'll have Geraldton as part of their export. We're very interested in that opportunity both for ourselves and for unlocking value. Really quick plan to stay tuned for what's happening with Fenix. We're going to keep mining Iron Ridge profitably. Stay tuned for really impressive full-year numbers. We pay a fully franked dividend based on a generous policy. We're going to identify the time plan, budget and operating parameters of W11, our second mine. We're going to make a decision on Shine. We're going to continue to unlock value from Twin Peaks and others. And we're looking to build a third-party logistics business in the Midwest. The $70 million contract we announced last quarter with Gold Valley, there's a lag on when that flows through into our earnings. We'll start to see that during the current quarter. It's going to be quite exciting. If you're in the Midwest, you'll see Fenix. We're very active. We're a partnership business, not just with the Wadjuri Yamaji, the traditional owners, but with all our contractors and particularly with our staff. And it's a growing cohort. This business is currently representing enormous value. We finished the last quarter with almost $90 million in cash. On a bad month, we add to that with $5 million of cash flow. The enterprise value is moving. I mentioned last year I came here, we were 23 cents. Today we're 30.5 cents. Stay tuned for what will be if you're back here in 12 months' time. I'm at the booth today and tomorrow. Would love to hear anyone who's got any questions and very happy to talk to people about the Fenix story. We're very excited about it. Thank you very much.